this panel is the longevity of crypto in the modern day economy. So our speakers today are Yorick Nev, who's the CEO of Bucks. Yorick is the CEO and co-founder there, Europe's fastest growing neo-broker. After starting his career in investment banking, he made his way to neo-brokerage as one of the first hires at Bucks. We're also joined by Gabino Roche, who's the CEO and founder of Sapphire. Gabino is as I say, the CEO and founder, and before this has been a chief product officer for several financial and technology companies, and over the last 20 years of experience in global IT and business operation environments, startups and F500 companies too. And last but not least, we have Rupert Poland on the end, Vice President, UK Financial Institutions Digital Asset Lead at Marsh and McLennan Companies. Rupert does lead Marsh UK's Financial Institution Digital Asset team, who service many of the leading digital asset custodians, exchanges and service providers. Marsh's digital asset risk transfer team were the first to write and place digital asset policy with Lloyd's of London and develop third-party staking insurance and create a digital asset special facility. So we are in very, very good hands today. So our discussion today is the longevity of crypto in the modern day economy. And as a bonus, I didn't fall off the front of the stage there, which I was briefly very concerned about, but I didn't do. So anyway, thank you very much for joining us on this. We'll get to the Q&A at the end. But we'll start by looking into exactly what we're talking about today, and that is, what will the crypto market look like in 50 years, 20 years, what about 5? It's moving so quickly, it's very difficult to say. But with all the recent market fluctuations, it's drawn into question the long-term success of cryptocurrencies, I suppose. With volatility and the apparent ease of which they seem to be socially engineered by big hitters in the financial world, can we really trust the market enough to risk investing in it? So, frankly, we could talk for a lot more than 20 minutes on this, so we're going to try and keep this quite punchy because there's a lot for us to get through. But I'll put this opening question to all of you. And for you, what has been the cause of the sudden downturn in the cryptocurrency, and is it likely to recover? I'll start at the end, Rupert.
Yeah, well, I think first and foremost we've got to, I suppose, take a step back when looking at this. There's been a lot of macroeconomic conditions which have been slighting most asset classes, and crypto's been hit the hardest. We've got a lot of political tensions with Russia, Ukraine. On top of that, you've got rampant inflation, increasing interest rates, and that's really created a gloomy economy. The assets which have been hit the hardest are long duration assets, so assets which are priced off the expectation that their revenue and profits are going to grow significantly over time. And crypto is probably the epitome of this. It relies on a lot of growth, and at the moment it's largely not just a speculative asset, but a lot of the price is driven from speculation. So I think that's been the largest challenge. And I suppose if you look at the stock markets, those which have more long duration assets, more growth stocks, they've been hit the hardest. The Nasdaq's dropped 30%. It's got a PE of 25. If you contrast that to the FTSE 100, it's dropped around 3% in the last 12 months, and it's got a lower PE of 14.
Yorick?
Yeah, so I have I mean, of course, I agree with all the macroeconomic trends. It's a fact you can't deny. At the same time, I do think that what we now see with the whole crypto market is just also part of just growing up. In the last 2 years, we've been absolutely spoiled, obviously, with what's been happening in the crypto market. And look, if you look at the last 2 years, the enormous bull run that we saw, also obviously this happened a little bit a lot in 2017, correction happening again in 2018. If you purely look at the new asset class, right, because that's what it is, a completely new asset class, opening up the markets to new types of investors, also institutional flow. There's no regulation yet. It's really, really the wild, wild west. And if you purely look at the part of growing up, having these huge peaks and now, of course, a little bit of a downturn, it's not that strange. I think, if anything, it's now linked a lot more towards, the actual stock market and other financial instruments. And I think that's also a good thing. In the end, especially in Europe, you see that the regulations coming up, MiCA's, of course, coming. Will that obviously create more flow towards the crypto market? Yeah, I definitely expect so. But it's all a part of growing up, I think.
Yeah, I think it's a matter of trust. The world currencies right now have lost a lot of their valuation because of inflation. They've been spending a ton of money post-COVID, and the cryptocurrencies are seeing a trickle effect from that, because they're another option to the currencies of each of the different jurisdictions, the United States, the UK. And when those currencies look unattractive, it inherently, for a nascent new asset class, will have an unintended effect against it. People are looking for safe havens to put their money. They're worried that the crypto won't be as liquid, so some are moving out to go back. But there's an argument, which we're going to get to a little bit later, where some countries are adopting crypto as an official currency for their respective markets. And the trust factor, I think, is going to come into play, because I think the long-term goal of a cryptocurrency is here to stay. And it's going to dispel some of the irresponsible fiscal policies of some of the governments, right, in their overspending, and to justify it. Because, I mean, in the US, back in the day, we backed it with the gold standard, and then we moved off the gold standard, and now it's just to trust in the faith of the US federal government, because they've never defaulted. But, given the current markets, you can see where that uncertainty is up to play, and that's why you see it in crypto. But I think essentially when people feel that there's liquidity in crypto, the more of that happens, then it will stand on its own without the same effects of the national currencies we see.
And do you think that, just to ask a question bluntly, do you think that regulation is going to provide that trust?
I think regulation is always going to cause unintended consequences. We have a lot of bureaucrats who think they're smarter than they really are, if I'm honest. And I work in finance, so they're always worried about sticks. And I say, worry more about carrots. And so financial regulators, bureaucrats that are not elected, in most cases, to justify their existence, they have to show how many sticks they have in place to say, look, I did my job and I created a rule. And I will tell you this, how many of them go back and look at old rules that they created to undo them? No, they never do. They leave the old rules in place that contradict new rules, and then it's up to you to figure that out. And I know, as a financial platform that deals with a lot of financial institutions, it's like you're damned if you do, if you're damned if you don't. So the concept is, yes, it should in theory provide more trust. I think when the shakers and movers put their money in the crypto, it's going to create unintended consequences and more volatility.
Because I want to stick to the volatility, because you've led that on perfectly. Because when you're putting trust with volatility together, that's a difficult mix, isn't it? But why is the crypto market so volatile?
I think one driver is probably the type of investor. If you look back just 4 years ago, I think about only 7% of the capital invested was institutional capital. The rest of it was retail. And although we've seen a huge shift in recent years, I think Coinbase reported that 80% of investments in certain quarters were from institutional capital. There is still a large proportion of retail investors. Massive. And the retail investors are more easily swayed by headlines and what sells papers. Not, oh, this underlying technology is still operating well. It's, look, a nefarious actors used it in a very bad way, maybe abused their position of power, and used it to actually take funds off innocent bystanders who potentially don't have the same level of information available to them or the expertise when actually interacting with the blockchain.
Yeah, it's an easy headline to jump on as well, isn't it?
Yeah.
I'll make it even more blunt, if I can.
Feel free,
Obviously,
absolutely.
I run a retail investment platform, and therefore all my customers are natural persons. So it's purely retail flow. We've been having discussions with a lot of institutional players actually around, okay, our flow, and especially in the crypto market, how would they position that flow and how would they value that flow? The interesting thing is that actually and I didn't do that myself, but they gave a name towards retail flow, and they called it dumb flow. Probably not the first time anybody hears this, but the reason is that in the retail market, obviously, there is so much more psychology at play in comparison to institutional flow. And that is the reason why they call it a dumb flow. It's also one of the reasons why actually that flow is actually very, very attractive for institutional players. The reality at the moment is that if you compare asset classes that are a lot more sophisticated, a lot older, the percentage of institutional flow in those asset classes are significantly larger than in the crypto market. I do think, not to come back to regulation, but let's call it trust, at some point that trust level is going to build, everybody's going to realize that we're living in a digital era, metaverse, Web3, all those kind of things that keep developing. Crypto is going to be adopted more and more. You also see now that the largest banks like Goldman Sachs are now also getting more comfortable, and you'll see more institutional flow coming. Does that lead to more volatility? Not in particular, but it does lead, of course, to more liquidity.
Yeah, the institutional flow is definitely more long-term, and I think the dumb flow that Jörg mentioned is completely accurate because there's an emotion for a lot of the retail investors. Most of them should be investing in crypto for the long run, but when they want liquidity to be able to access their funds, they're moving in and out of the market quickly. It's becoming a little bit of a gamble for them, and it's this fear of flight instead of just hanging in there.
And I think jumping on the institutional point, I mean, every large bank is looking into cryptocurrency. I mean, we service some of the largest at Marsh, and one of the reasons why you've potentially got smaller asset managers who aren't venturing into the space just yet is there is a fear that the infrastructure has not been tested for a long enough period. So I think over the last 2, 3, 4 years, you've now got custodians who have been running smoothly, and people are getting that confidence and they're getting that familiarity around the technology that they're now able to start, I suppose, venturing into it. And lots of them are seeing it as a great buying opportunity where you do have all these economic headwinds, price is very low. So I think the institutional capital will just continue to trickle and flow in, potentially buying up where retail investors are selling.
But sticking to that theme of nervousness, and I'll start again with you on this one, Rupert. Why do you think companies have been nervous, though, to accept crypto as a form of payment?
Well, I think, and sorry we keep going back to it, but definitely a part of it is regulation. There's so much uncertainty. If you look in the US, we're still going back to a test developed in the 1940s for orange trees, effectively, to determine whether cryptocurrencies are securities or not. It's taking forever for individual cryptocurrencies to be classified. So you have these companies who are put in a position where if they do accept cryptocurrency, they fear it might be a very small risk that they're then effectively doing a regulated activity which they haven't got approval to do. So you have that fear. I think on top of that, lots of the systems we have in place rely on slight settlement delays. They rely on intermediaries. So suddenly you've got a system which is decentralized, peer-to-peer, and instant. It causes a lot of operational concerns. And you've got all of those risks, and there are many, many more. And at the moment, some people feel that the reward doesn't quite match up to that. It's only a matter of time before it does, so people are moving very, very quickly. But certain companies who, let's say, aren't large banks, large financial institutions, FinTechs, might not feel the need to enter the space just yet, but they'll come very shortly.
No, there's even a big lobby happening, right? I mean, a lot of these large players, they don't want this change. They have systems built, like indeed settlement, like at T+2, right, for normal asset classes. That's, I mean, in this day and age, that's ridiculous. That you have to wait 2 days before settlement takes place.
And it was 5 back in 2017. So, yeah, and that's one factor that's in play. Now you hear there's a trend that the U.S. markets are moving to T+1, and Europe's looking at the same thing. But with crypto, it's T+0. On the same day, you can actually settle. So I just want, you off stage you were mentioning the GameStop fiasco, and what the folks on the audience may not know is the industry has, when we say T+2, it means 2 days after the trade, we can actually settle the account. Is it fair that you bought Facebook shares, you waited 2 days for it to sit in your account? The banks create magic behind the scenes to settle the trade because they don't have their operations together. You can put an expletive in there. That's one thing at play that makes them concerned about adopting crypto. But the second thing that's at play that I think is even a bigger story that no one's talking about, it is the fact that a lot of the countries want control over their currency, and crypto they don't have control. And I know we're going to probably get to a question around, central banks adopting their own cryptos. But when you see things like El Salvador adopting Bitcoin and things of that sort, El Salvador basically said that we're relinquishing control over our own currency and also adopting one that the market is deciding. And if the market says the value of this currency is this way, it doesn't matter what a Federal Reserve or central bank says it's supposed to be, which is what happens today. And then therefore the street, the common day folks like you and myself, buying and selling, we can determine, hey, is the US dollar versus the British pound as worth as much as it is, or is it Bitcoin actually better? And that's the federal governments of every nation is afraid of that. And so the institutions that are afraid of adopting cryptocurrencies also worried that the governments, the regulators, is what I meant before, will punish them for enhancing the devaluation of their own currencies for a cryptocurrency that actually truly pegs the value of its own currency, right?
Well, we've moved on to this perfectly, so let's address this now. You know, we've got El Salvador, we've got the Central African Republic adopting Bitcoin as a legal tender. Is this just the start? Do you see more countries doing that? And you know, are there genuine and I suppose legitimate reasons to hold back on it?
I think in this case what you're going to see is first thing that happened is when you know you're rolling out something like this for the first time, there's always going to be hiccups, and you've even said so before. It's an asset class that works, it's in its nascent stages, it's going to be volatile, there's going to be missteps. The first thing I personally saw was nothing but a bunch of news of why this will not work. Every major news in this media outlet, mainstream one, had denounced what El Salvador did. I'm not saying that they rolled it out perfectly at all, but what they're not seeing is the long-term effect. And if you ask me, too much of the media isn't independent enough to understand the bigger picture, and they can't fathom a place where a central bank isn't controlling the currency, right? And I think there's a dichotomy here that's actually beautiful, because we need accountability for central banks to understand that there is a true market value and they can't be irresponsible with their fiscal policies, because it impacts us. All of us are paying in inflation today because everyone engineered their policies fiscally, and we're seeing the pain of that today. A cryptocurrency that is not controlled by any central banks will set the standard for the market, and I think that will course correct. The problem is that if a financial institution decides to adopt a crypto and then they get fined for the country that they're in, whether it's the UK, EU, or the US, that's going to restrain crypto, and you're going to see things maybe moving to Singapore, to the Cayman Islands, to other places
you need a level playing field to make that work, right?
Correct.
Otherwise, it's just not going to work.
And I think the people will demand it, but I think that's where you're going to see this volatility. But go ahead, sorry.
No, look, I think you're completely right. I think, in the end, like I said earlier, we're moving into this digital space. And the reality of the matter is that a digital currency fits perfectly well in that space. And if you purely look at the new technologies that underpin everything that has to do with cryptocurrencies, obviously it's a leapfrog from where we come from. And therefore, I think it makes sense for central banks to look at that very seriously. That being said, I don't know to what extent the choice for a Bitcoin or any other currency is at the moment the most logical one. And I'll explain you why. Because at the moment, there is no control in place really. It's all decentralized. As a government, you want to have or maintain a certain level of control over your budget, your financials, and also the different streams of financial instruments. And like countries like, in Central Africa, El Salvador, at the moment, let's face it, corruption is still very high there, right? And this is also a means for those governments to make sure that a lot of these, flows of monies are, untraceable. And that is, I think, at the moment, still a concern that I have. But, in the future, absolutely, 100%. I think we need to move towards a digital currencies that is massively being adopted. But we need to, of course, have a level playing field, and we need to think about how to achieve that.
Jorik and Gabina, I've got a question for both of you, actually, coming, I suppose, from a business which serves retail primarily and then institutional. How much of your day is, I suppose, taken up with not you personally, but your company's day, taken up with dealing with individuals or institutions who kind of can't quite get to grips with a technology or a platform or potentially human error?
Well, for us, it's a huge thing because we had to split our entire operating model, right? We have real asset classes like cash equity, ETFs, ETCs, and we have cryptocurrencies. And we can't do that on the same platform, right? We have to have a different crypto broker that only deals with the crypto market and all the associated parties there, separate from the more old-fashioned infrastructure.
The process is the same for all of this. They're just on different infrastructures today, and they've invested so much money that everyone's become robots, and they only know the way they've always done it. So I'll give you one great example. One of the reasons why we have a T+2 experience today, right, is there's a reconciliation process. When you hear me say reconciliation, it's like you checking your bank statements, right, and with your checkbook, okay? When the buy and sell side in trading happens, the buy side does a reconciliation, the sell side does a reconciliation. The custodian, where the bank account sits, does a reconciliation. All three are doing this asynchronously because they're not looking at the same record at the same time. But in crypto, just like the cloud, it's all decentralized. Everyone sees the same record at the same time. You don't need to do 3 reconciliations. You only need to do it once because everyone's seeing the same record. So it's about moving to that model, but everyone's been so stuck from the days of faxes and looking at that and comparing their details with spreadsheets that they haven't overcome this. So that's one problem. But I want to come back to one more thing around the corruption point that Yorick brought on. That's true. But here's some news for you. Corruption exists in the Western nations as well, big time. Okay? I personally know this, but I will tell you. And also the good intentions of policies that are put in place also create unintended consequences of corruption as well. So I do think there is a level of trust that we have to, because there are people who can actually use these cryptocurrencies and then have a tremendous loss. And for people who are uneducated in it, we don't want them to have that. So we got to find a way to create safety nets. But I think, and I do believe there is corruption happening in El Salvador too, to a degree, but I do believe that the government's intent was to incentivize investment in their country, and if they're the first ones to embrace this new avenue of creating liquidity and investment in their country, that they can be a safe haven for this, to grow this type of currency, because they know in the long run, I think, at least in principle, that the things, cryptocurrencies like Bitcoin will last. And that's why I think the long-term bet on crypto is it's here to stay.
Gabino, I think, you raised a really good point. Like long term, I think that we are definitely going to be at a bit of stage where you can have cryptocurrency as a legal tender. But at the moment, if we say something's legal tender, we'll be forcing individuals who may not be well acquainted with the technology to have to accept it. If you've got someone on the street who's selling their house, they might not want to take on a digital asset at the moment because they might feel scared. When you've got all of your assets centered with one thing and you sell that one thing, is it fair then to put all of your eggs into the digital asset basket?
I just view it like the euro versus the British pound right
exactly.
now. So you have two currencies that you have options for. We don't force anyone, it's about optionality. Yeah. But I'm just telling you that central banks are worried about competition to control. But yeah, sorry, I interrupted you.
No, I completely agree.
Well, what I wanted to get on to quickly before we go to questions in just a moment is we seem to keep coming back a lot to regulation and about how things can be regulated and go into the future. What would each of you like to see happen to progress that conversation?
Well, I think regulation is actually one of the most boring, aspects of, talking about cryptocurrency. Obviously, regulation has a clear reason, right? The reason they want to regulate things is because they want to have control. Right, and obviously, certain protection mechanisms need to be in place. I all get that, right? But at some point, I do agree with what we were saying earlier, is that the regulators have a job to regulate, and they're going to do their utmost best to keep creating, legislation over legislation. You get overlay, and at some point, it's just becoming very, very complex. And I think that is the main thing we need to avoid when it comes to cryptocurrency. Sure, you need to have protection mechanisms in place. You need to make sure you have certain systems and controls in place. Sure, I get that. At the same time, I think the decentralized aspect of crypto needs to maintain. That is the nature of cryptocurrency.
It's almost a fresh look at regulation, as in the regulation won't be the same as the regulation we're used to. It's a whole new form of regulation.
And it should be.
Yeah, I think the way you got to look at it is that how many times as you as a bureaucrat/regulator were asked to consolidate your previous rules? If you're going to introduce a new one, how many old ones did you get rid of or consolidated? Create a rule like that to create the balance. And I think the other piece I'd love to see is a regulator demand optionality, as opposed to a single crypto that they bless and whatnot. Say, okay, well, there's the one that maybe our government blesses or central bank blesses, but then there's this other or two that we also say are optionality. They're not controlled, they're decentralized, right? And I think that would be the way to kind of open it up, and there'll be even more trust. Turkey's releasing theirs, but it is the model that Turkey's actually releasing is complete control, right? If they don't like your thinking, you will lose control over your ability to purchase food for yourself. That is the danger, for the record. Everyone talks about crypto and they love it, but if it's crypto that's controlled by a central bank, they don't like the way you think, they don't want you to disobey, then you lose control over your liquidity. So everyone's getting excited about crypto. Just understand that piece. That's why I think the decentralized aspect is important. If regulators get involved and they try to use news to say why they need to control, they need to provide optionality that keeps them in check.
Well,
I completely agree with
Sorry, to respond to one specific aspect here. I think it all starts with a mindset. There are already different types of regulators. So we have 3 different licenses, right, as a company. So I've been dealing with multiple types of regulators from different jurisdictions. And you already see quite a difference between those regulators at the moment. Some are very, very rule-based. And they have a rule book and you have to follow those exact rules. And if you go outside those rules, you're in trouble. Other ones are already a lot more principle-based. So they don't have a tight rule book, but they basically say, okay, let's look at the fact of the matter. Let's look at innovation. Let's see what makes sense. And therefore, the use of common sense in this regard, I think, starts to become a way more important thing than it used to be. Sorry.
I mean, you made a great point on common sense, a principle-based approach. Ultimately, and I think Gambino, you actually mentioned it too, on the legacy systems. So we've got this fantastic new technology and we're trying to fit a round peg into a square hole. It's just not quite working. We're applying dated regulation to a very, very modern technology in a very prescriptive fashion. Rather than trying to apply what we already have, why not create a very fluid, open regulation, talking to leaders like Yorick, Gambino, and getting their take on what they need. So we need a fluid approach which enables innovation but does protect retail users from nefarious actors. And that's quite easy to do without punishing companies who are just slightly changing the rule book, which I think is what the current regulation risks doing.
If I could just rein you all in quickly, because
Sorry.
I'm conscious I want to get to questions from the room, because we could talk about this well into the lunch break and I might have a riot on my hands then. So let's go to questions. I think the first hand came up at the front here, and then there was one at the back and then one at the front.
Hey, I think it's really interesting to talk about crypto as a currency, because at the minute it feels very much like it's an investment haven as opposed to a currency where people can actually trade on a day-to-day basis. I think Bitcoin dropped, 16% in one day. I think the lack of volatility in Bitcoin and other cryptos is actually helping to allow retailers and people who operate in retail to actually think about it as a currency they can start to trade, as opposed to, okay, I buy something from Amazon for £100 today. I know it's £100. I'm giving Amazon £100. They go and trade that £100 with somebody else. They know it's worth £100. Whereas Bitcoin could be like, I trade for 100 Bitcoin. It's worth X, Y, Z today, but tomorrow it's worth this. How do you think the markets are going to operate and allow real retail to start to play in the crypto market?
I think it depends what the use case is. So there we're talking about a payment system. Payment system, it doesn't make sense to use an extremely volatile asset, because it's very difficult for companies to factor that into their models. Suddenly when it goes up 20% or down 20%, it's completely impacting their margins and the way they operate. But that's not to say there isn't a lot of other solutions within the cryptocurrency world which fit that use case brilliantly. I mean, we've got some fantastic fully collateralized stable coins which you can transact like that, which are relatively decentralized and would be brilliant for merchandisers to use.
Yeah, I agree. I think there's always been the discussion, right, between is it a form of payment or a monetary storage of value. I think at the moment the latter makes more sense, purely because it's also seen as an alternative towards the other old-fashioned asset classes. I mean, many people made the comparison between Bitcoin and gold, right, as a monetary storage of value. Obviously, the transaction speed on certain blockchains are still very slow, and therefore, to interact as an actual payment currency, I think for some are just a little bit too early. I do think that at some point, and I still, I'm a big believer in this, obviously, that at some point the growth of the crypto market will continue. The institutional investments will continue. It will start to grow, and therefore the liquidity will increase, which in fact can also lead to a lot less volatility. And then there are more cryptocurrencies that fit that picture a lot better. And yeah, why not? Then it could definitely play a role as a payment instrument as well.
I think the only difference here is what you described is a foreign currency transaction that occurred, because you're trying to take it to British pounds or euros or US dollars from Bitcoin. once both sides of the party say they're going to both use Bitcoin, you can peg the value. That happens after the trust is in place. Right now, the trust for Amazon is in US dollars or British pounds, and so you're paying that currency exchange. And that's the same thing whether you bought US dollars, and now it's a little stronger than the British pound. I'm from the US, so I'm making good use of my dollar here in the UK lately. But my point is I'm converting. Every purchase I'm making here, it's based in US dollars back at home, right? So my bank account is actually doing the currency exchange. That's actually what's happening with Bitcoin. But when the trust is there, and then firms do adopt and say, you know what, we accept this as legal tender as our own, and they're not doing the currency exchange, then you're going to see a little more pegged at the value, especially if you don't have to do a currency trade to the US dollar or British pound, right, from Bitcoin yourself.
You don't have to do it anymore. Yeah.
Okay, I think the next question, I think it was on the back row, I think the next one, and then we'll go to the front and then just in the middle.
That's too many questions.
We've seen obviously what's happened in El Salvador with the Bitcoin beach. How long do you think before we see a strong crypto community in the UK and Europe and the US?
I think it's just a matter of time. You know, in the end, look, we're in the early stages, right? This is still a little bit the wild, wild west here. And obviously, I think there are certain governments and also corporates, institutions that are doing their best to help, obviously, in the adaptability. But we're not even far, close to mass adoption, right? The total crypto market is it's below $1 trillion. It's smaller than Apple as a company still, as a whole. So no, we're still very, very early. It's still very early days. But obviously, like I just mentioned in my last answer, I think if mass adoption will happen, and you see institutions also like pension funds, all those kind of things investing into it, then at some point it gets to a certain size where this can happen.
I think inflation and some of the recession is going to press the question about cryptocurrency stronger. And one of two things will happen. Either people will flee their home-based currencies because the inflation and policies aren't working for them and they move into crypto and creates competition, or it still creates too much instability that the crypto space is going to be held in a pending state before it's more widely adopted. What's happening in parallel, though, you're going to have countries like China release their own central bank controlled, by the way, cryptocurrencies, so they'll control their populace with this. That's going to create the perception that crypto needs to be adopted, so then every central bank is going to try to promote that. I think it requires people like yourselves, I don't care how small you are, even if you're not institutions, and to demand your regulators to provide that optionality I talked about, because you want decentralized crypto alongside with the central bank ones for optionality, so you don't have the China model control.
Okay, I think the next question was it just down at the front here, if we can get the mics forward? And if we can keep these answers fairly snappy, come on, try and get as many questions as possible.
Hi, thank you. Touching on what Yorick and Gabino were saying earlier, how severe do you think the damage is when countries like India and the UK regulate and put legislation on crypto? And how do you think, if there is a lack of regulation, how do you think that that could affect global currencies like the US dollar and the pound?
Look, I mean, the first question that you're asking, like, what's the damage? I think it's very difficult to say. It all depends on what type of regulatory framework they're going to provide, right? I think MiCA is already, and all the MiFID III things that are coming, of course, in the EU, it's already quite intense, right? Because effectively it already becomes a regulated asset class. Every company that offers cryptocurrencies needs to go through KYC, AML requirements, all those kind of things. There's systems and controls in place. And that's the starting point. So I think with that, as long as they can keep the decentralized character, I think the damage is going to be, limited. But that's just a matter of time, I think. That's at least my take on that point.
The quick answer, because I'm trying to keep it punchy, Sapphire today, we have patents that creates memory around data and documents for the KYC, for the AML, for the tax, for the regulations. So we're automating this so you can actually adopt the cryptos much faster, and that was without regulators. So I think it's the private market, the innovation, the FinTechs that actually make that happen much faster than regulators.
Okay, we'll just take one more. I think that was... Hang on, we've got two more hands up. We're all right for two more?
Okay.
Yeah, is that all right? I think we had one there,
right?
and we'll go one there, and then we'll wrap up for lunch.
I'll be more snappy.
Hi. So there are stable coins that are being introduced by central banks, but there are also institutional stable coins that are being introduced to the markets as well by independent companies and things like that. How much do you think that's actually going to change the crypto landscape as well?
I think private innovation is really, really important. Gabino touched on it a lot. When you have a central government who's effectively controlling all of the stable coins, they're deciding the rules, what it does is it can sideline private innovation. Ultimately, we're all humans. Our agencies, to some extent, to varying degrees, are aligned with making money. So if you have the ability to generate economic value from creating a stable coin privately, then the stable coins we all get as a result will be better, because you'll have the best minds flocking to effectively innovate, create their own businesses, create their own stable coins, which is only going to help with mass crypto adoption in future years.
Optionality is the key, I think, right? The market will dictate what's the best. The ones that institute the best policies will be the ones that get adopted. You see it in the US market. I mean, you look at your smartphones, there's iPhone and Android for the most part, right? Because people gravitated. No one forced you and said this is your only option. Communism did that and didn't work too well, right? So I think the more options there are, the market will flush out what's good and what's bad.
I agree with the optionality. The only thing we should all ask ourselves, I think, is stable coins, stable to what? Right? That is a little bit the discussion that I'm still struggling with.
Okay, and one final question here before I release you for your lunch.
Yes, hello. My question is about what happened in Salvador and Central Africa. What were the repercussions on the market? What happened to liquidity, to assets, to banks? Can we have an insight about what happened to them after they accepted the digital currency? Thank you.
Yeah, I think part of it is the whole answer I gave before about the foreign currency exchange, right? Because even though they accepted Bitcoin, they're doing business with other jurisdictions around the world, and those assets, their leverage to their purchasing power behind what they had actually had dropped. And so everyone decries that, oh, this doesn't work, but it's a nascent asset class with less than $1 trillion adoption, right? It's going to go through those hiccups. But you know what is not lost on the movers and shakers in crypto was there's a safe haven where they can successfully invest in crypto if they want to, right? And I think that's the opportunity in the long-term game. But certainly, yeah, there's a lot of pain in the short term, and people lost leverage powering, money buying power right behind that. That's what I see.
Yeah, in the short term, it didn't move the needle really. It's more future driven, I think. For sure.
I think the benefits would have been greater as well if you had lots of other countries doing the same thing. Cryptocurrency is brilliant for bringing individuals together to be able to transact, to do business, to socialize. The more people who use it, the better the use cases are. So I think, you know, we can't really make a decision or a comment about whether it was good or bad until, you know, we've had the benefit of time.
And the benefit of time is something we no longer have, and thank you for setting me up for that one so much. Gentlemen, Rupert, Yorick, Gabino, thank you so much for your time. Thank you so much for your questions. Apologies we overrun, but you know what? We could have carried on for hours, which we won't do. Round of applause. Thank you very much.
Thank you.